The financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher stepladder when it comes to that. So everybody will be hurt, and America will be hurt badly.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 22nd through September 29th, 2025, while supplies last. First this week, the famous 1-ounce Gold Krugerrand are just $60 over spot. Next, MS62 $10 Gold Liberty are only $90 over melt per coin. Finally, 100-ounce Silver Johnson Matthey bars are just $2.20 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the Market Sniper. Francis, thank you so much for joining us today.
Delighted to be back. Thanks for having me.
Well, it's great to have you today. I did want to discuss what's happening in precious metals with silver over 44, gold making new all-time highs, nearing $3,800 an ounce. We're recording this on September 24th. You're getting a bit cautious short-term in what we're seeing, especially also with respect to the US dollar. Can you share with our viewers kind of what your outlook is for precious metals going forward?
So it's very important to first state that the positioning in precious metals is the correct one. We're in a debt-based collapse, and we have witnessed an extended spell of fiat devaluation on all the fiats, but the dollar's been one of the worst. This followed a 55% correction in the debt markets from 2020 highs over the course of the last 5 years. We described the escalator up, the 40-year bull, and the elevator now down on the debt markets. And we also remind everyone that it's a debt fiat system. The two are synonymous. I sometimes use the Siamese twins, children joined at the head. You can't drown one without pulling the other under the water as well. And that's why you're seeing fiat debasement, which is why cost of living is getting disorderly for folks in the States. There's a lot of complaints there. So let's just recap on data, and then we'll come to why I think there just might be a pause and a little bit of sideways and maybe some corrective price action in a minute. But I don't want people to miss the prime story, which should be retained, and that is on the long run will be surge. So this is a technical comment on a lower time frame that I'm making, whereby we've made a good a key level, but long run fiat debasement, this is really only the beginning. Go and do the Dow Jones divided by silver miners for yourself, or if Elijah would like me to, I'll do one or two of those cross valuations. Miners are really early in the cycle. Silver's very early in the cycle, etc., etc. Can I start with gold and deal with that technical pause moment, Elijah? Because I'm kind of the charts guy. It's what everybody who comes to expect. We trackers, and we read the footprints in the sand, basically. That's our primary goal. So we just had an amazing run. Our community and I were aggressively leveraged long here. So we are investors, but we also try add a bit of extra spice on that by getting leveraged long. And we got leveraged long in and around the 3,340s, 3,350s, 3,360s with multiple entries. And you have just made a key technical target for us at the 3,769. This is our bespoke favorite setup. It's called the HVF setup. It's a squeeze in volatility. It's the Hunt volatility funnel method. And this is what we love to trade. And in bull markets, you consistently get them. So it's a very useful way to turbocharge your stacking, providing you can implement safely with real stop losses and the hyper over symmetric, the asymmetric gains, you accelerate your ability to stack. And this has got a lot of our community members who are banking over 6 digits, one or two more. Others at lower levels are making just good profits for the first time in trading. I'll just highlight. So here was the run. You made our interim target there. That's your point of rest. You got a red candle there and a pullback. Then you went into this broadening structure. Many people see that as weakness. And in actual fact, when you are inside an HVF play zone, which is that after this triggering point on the green line and waiting for target, it's actually bullish. You popped out the top and now you've done that. And these two candles, a little bit of a wick sell here, you can see back down. And we've got a red candle also with an upper wick sell. So a little bit more sideways and possibly down now for a spell before opportunity. So if you were just about to put $1 million into miners, you might get them priced a tad cheaper if you're patient. But don't stop getting those miners. Don't stop getting that gold, silver, and platinum. But from a timing perspective now, we've just done. We expect progress decay. That's what a target's meant to be, a localized high where you get a rest and a little bit of pullback. And you often create new structure. So an example of what could happen, it's just one of many. It's not a prediction, by the way. You could come down a bit. You could swing about a bit, you could come down a bit, you could calm down, and then some data comes out and then you go again. So for those that are stackers with physical, there's no action to take. For people that are more trading with CFDs and things like that, you might want to bear a bit of awareness to that. Also, everybody's become super bearish the dollar, and we were too, and we were right to be, but there's sign that the dollar against the other fiats and even here on gold will have a little bit of pushback. I'll just highlight the monthly. You can see how the dollar has underperformed relative to the euro, another failed fiat, of course. Let me just remove that. Sorry, that box. We don't need that. It's jumped on. You can see how you've had over the last few months. I mean, literally, this is January, February, March, April, May, June, July, August. I think I started, that should be January, so forgive me, I started one after. So we're in the September month now, but you can see we've sold off there, and that's a little bit like a shooting star, and most of these were big, stretchy upside candles with deval of the dollar, up valuation of the euro, which has all of the same problems in many senses. A lot of people are more familiar with the Dixie, which is actually the same thing but upside down a little bit. It has a bit of Japanese yen, Swiss franc, and Swedish krona in it to small degrees, but it's 52% still the euro. And you've had a little bit of a reversal after making a marginally lower low and coming back up. It's too much. It's only one swallow. We don't call a spring or a summer on that. But this was very capitulative. And there's a possibility that, a little bit of a rally and a little bit of comeback of the dollar might be on the cards, because a lot of the other trading nations that have surpluses to the dollar, mainly China and the Eurozone, you would have had quite a lot of a correction on importers with a combination of the tariffs and the currency effect already. And they'll be squeaking about currency manipulation soon if the dollar continues to go down and they can't sell to any meaningful level anymore. So that's a kind of small time frame, medium time frame, technical perspective. It's not the time to rush in and get leverage long now that everybody's super excited about it. But we've had an amazing spell, and it will continue when we go back up to the much bigger time frames. You can see that on the monthly time frames, let's clean that face, that this is still part of a very, very big macro bull market that is really just getting its boots on. But timing does matter. If you want to hold the position, you don't want to get in at the worst localized point, because people don't have the patience and they get out if they're sitting with losses for too long. So yeah, let me leave it there. Did you mention silver while I'm at it?
No, I think silver, breaking the $44 level, a lot of people are seeing this as, 44 was kind of the second top back in 2011 after it went to all the way to 50, pulled back and then topped again at 44. So people are seeing this as a really significant level here. What is your take on where we go from here?
Yes, we did. In fact, I think we tweeted yesterday. Let me just bring it up. I've still got the chart quite close. This is on a quarterly chart, and I annotated and drew this. And the point was that you never, despite we trading up to very close to 50, and I think in 2011 we might have traded almost 50, depending on which broker platform, we never held it for a quarter. We never held it. This is actually the lip of the cup, the candle bodies. This line over here that I'm sort of making thick. And if we're only 6 days away from the end of the month, or 7, but two of those are a weekend probably. So there's only 5 trading days left of the entire quarter that ends September, which is Q3. So we're ending Q3 of 2025 right now. Silver would have to come a long, long way down in the next 5 trading days for this not to be the breakout quarter. So congratulations. We're sharing it all together with all your viewers and people that support Miles Franklin. Keep stacking. You've just triggered something on a far larger time frame. I highlight that one candle is an entire quarter of a year. That means 4 of them is a year. You've just had, this is the big cup and handle, beautiful rounded bottoms on the handle and on the main cup. You've just triggered that pattern, which has a very, very big target to come. So we on that point, we've spoken of the upside HVF at $330 as the final, a target, not the final high, but a target where we might expect further rest on the quarterly chart. So Elijah, on that silver chart, this is the setup that has triggered for us. So we were talking about the cup and handle. Traditional technical analysts do cup and handles. We actually have an upside HVF in this, which sees you get in earlier with a type of stock, which sees a greater reward. And you'll even see a squeeze within a squeeze here. So the actual entry is down here. We highlighted on, this is a quarterly chart, again, reminder. We highlighted when you first chipped the wire on the main pattern, but actually we were already in long leveraged and you'll stop there. And the gain is up to $330. That's a huge, huge move. This is, as I say, a very big time frame view. It's a massive risk reward, 23.91, my apologies. 23.91. But if you had actually got in here, it's actually even better too. So we were saying, look, this is the point for longs. This is some time ago. We were on your show talking about this. And we've done this divided by the CPI AU CSL as well, which is the alleged inflation rates. Let's just get that risk reward. So this is an amazing chart. That's where you can see 1st of Jan 2025 was the first time you broke the green line, the triggering event for us. And since then you're up, and you're up at 44.15. I point out that there's a kind of 47, 69, 48 blue line here, which runs through those highs. But it shouldn't be, if it has a pause, it shouldn't be excessive. And it's not guaranteed that it will. It's run our first interim target. The next target is up at $90. People will be looking very forward to that because they'll be on the doorstep of 3 digits. And then we're going a whole next level of up. Again, just bear in mind, having just run that first interim level target, the remaining few days of the month, we could come a little bit back. As I mentioned with gold, gold's the king, and silver still needs to be permissioned to run by gold to a degree. It will independently run to a degree, but not too much. If gold comes off a fair amount and starts to be a little bit staid and a little bit more lackadaisical for a while on price behavior, then silver will slow. And the $50 gateway is a very important point. We talk a couple of times, we use our catchphrases with you once, twice, and then on the cup and handle part 3 times, and then we say the 4th time is the lady, the one that breaks. So we could still see the possibility that when you get into this range where you were rejected here, those wicks, you can see those are rejections. that you might get a similar degree coming in the early weeks of October, maybe a bit of a rejection. I don't think it goes far, and I think then you go again, and then that's the big break. That's the one that will take you into triple digits, and we are pretty high confidence on this. It's a good setup. It's a long-term setup. It's one we've been watching for absolute ages. You could have been long from 30. You would already be now $14 to the good. That's almost 50% on your leverage trades if it's 45 in a few weeks. And you would have had a SOP. And if you had started down here, you would have been in even sooner. You would have been in the 28s, 29s, and your stop would be even tighter. So you are in a breakout, fast-moving HVF trade in silver, and our expectation is 330 will be the next major target resting place for this time frame under review, which, bear in mind, is a very macro time frame. So things unfold slowly if you're watching it day for day. But when you look back over the months, you go, wow. A bit like when I was showing you the gold chart on that quarterly time frame. It's just mainly up, really. Even with the periods, the 3 years since 21 where we went sideways, it's mainly up. Let me hand back to you at that point.
No, certainly, and you're looking on a technical level only, but it's so great when the technicals and the fundamentals kind of align at the same time. And you've talked on our channel before about the debt crisis around the world. We've recently seen issues in Japan and also in Europe, and obviously the U.S. is a big debt issue as well. Do you want to give us an update on that? What are some of the fundamentals that you see really driving these moves?
I see a lot of narratives that I call the mechanical bull that will try chase stackers, and they're pretty belligerent, single-minded bunch out of stacking. For one narrative that's a pet peeve that I try debunk and just keep people focused on the main core thick vein theme, which is the one that's going to keep paying you. It's a bit like I sometimes say, you know, we're looking at a building that's in an orchestrated collapse and the foundation is going. And then there's 4 people saying, yeah, but the equity markets will melt up, you know, or narratives like that. It's a bit like being on the 9th floor in one of the apartments arguing about the color of the paint when the whole building's actually going to go down. The main trade is the financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher step ladder when it comes to that. So everybody will be hurt, and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by major buyers disappearing, and so we're talking global probable depression, and you have to survive that. You have to survive that when that happens, and it's a heck of a thing. But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt, and gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the NASDAQ and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to, you know, that story, properly put Dracula to death on that one, is if we take and do the very charts for you. Let's take the Dow Jones Industrial, for example. It's a popular one. Everyone will say, yeah, but all-time highs, all this narrative. Everything should be measured in gold ounces in a fiat repressional collapse period. There is no sound money when they're all in the fiat system. And that's what you have. The high for the equity market culture is here. That was peak equity. 1999 was peak equity. We're talking a localized high previous to the current stock market's highs that you're making now. That was gold at 256 ounces and the NASDAQ.com boom. You corrected substantially there, and we started to have gold at 1,000. Then gold slowed down a little bit, it went right up to 1927 at this point. Then it came back down a little bit, and they reflated a bit of a NASDAQ bubble. As you can see, I have an inverted setup structure for downside here, which is saying in gold ounces, the Dow Jones is heading down. And it's the same for the S&P and the NASDAQ, despite NVIDIA, despite all the things you say. So stay with the core winner, because everything is a monkey on a grease pole sliding down. And it might number go up, but in real terms, it's monkey go down. Okay? Excuse the analogies, they come up with some fun catchphrases, but monkey go down is definitely one I'm going to be sticking to. There's another narrative, and this I don't need to share the chart on, that I'm hearing quite a lot of, Elijah, and it goes something along the lines of, well, there's this tether thing, and, they're going to, with tether, they're going to, successfully orchestrate a massive buyer for treasuries. Because the argument is there are no true legitimate for-profit buyers of treasuries anymore. You've got to look at two nations. The biggest net accumulator in the last month was the United Kingdom in a debt-based crisis of its own, and France in a debt-based crisis of its own. This is what I call synchronizing all the lepers to all fall down in a ring of rosies to end all ring of rosies celebrations. That is not sound money talking when the biggest backers are people that are not pursuing sound money principles, are the only buyers of your debt, along with Cayman Islands and Luxembourg. These are proxies, and I call them Pharaoh's slaves. They get buried with the Pharaoh. They know they're dying too. Whether they're still alive or not, they're going to have their throat cut, and they're going to be put in a little cask next to Pharaoh. Pharaoh can't go to the other side on his own, and he's taking some of his pals with him. And that's my fun way of caricaturing. They still bid for treasuries, and the notion that this tether on Bitcoin is going to suddenly balloon into this massive gaping abyss that will consume everything that gets thrown out is belied by the numbers. So I want to just throw a bit of numbers. So this is kind of, Francis does some narrative debunks for the fact that it isn't a full debt reset, and that can some way play their way out of this. In the last month, 550 billion of new debt got issued. Tether, since 2014, its formation, when it started to purchase collateral of treasuries, to today, it actually only, the number I got from my research was to the end of the mid-year, so it won't include this quarter, has bought in total 127 billion in treasuries. 127 billion. You've just done 550 in 30 days. So the one number is 4.3 times, no, not quite, I must get my facts straight, about 4 times larger than the other. And in 30 days, 2014 to today is 11 years duration of accumulating treasuries. So I just want to, the proportionality is, it literally is, if you'll excuse the phrase, a pea in the ocean. It's not going to register on the needle. It's not there at all. And the borrowing is going higher and higher, and the interest payments are becoming a greater and bigger concern, and ever climbing in terms of their significance of the total expenditure to the banking cartel. So you would need USDT as a market cap at about 3 or 4 trillion, and adding literally $500 billion every 30 days, or any of the other stable coins in total, USDC, the others, to be doing it on that scale just to match, and they would have to be growing at the same rate. And even if I took even if I took the Tether market cap right now, it's nowhere near that. So there has to be a major swing. And it has to be so vast and so big and so continuous and accelerating at such a pace to ever become a matching force for this huge parabola of debt issuance. So right now it's a nothing burger towards it. It's 18th biggest buyer, And I don't think it's not a rescue plan. It's not masterful 3D chess or 5D chess being played by Besant or anybody else, any political favorite of the moment. So yeah, those are two narratives that I feel need pushing back on.
That's very good to know, because I think, yeah, as you mentioned, that's kind of stable coins or Tether you're talking about is kind of seen as, well, maybe that could save the system. But one of the things I did want to talk about with you is you're saying, no, the system can't be saved. And we've talked about before how we're probably going into some sort of reset. And there seems to be two different perspectives of what that reset could look like. Some people say, well, in the past, we've seen when fiat currencies fail, people run back to precious metals. And we're seeing that somewhat around the world, right? As central banks are bidding up the precious metal prices and accumulating precious metals, and big institutions are buying. But on the other hand, people are also concerned that we could go to central bank digital currency or something with even more control. And one of the things I was just learning about is looking into what happened in Germany after the Weimar hyperinflation. I would have thought, well, they probably went back to gold, right? Because, after fiat currency, as the narrative goes, you always go back to precious metals, but they didn't. And the government technically said technically the currency was backed by gold, but in reality it really wasn't. And you just saw massive inflation as well going from that point again, and the public was duped again. So your perspective on what we are going to be going into, because if you look at history, it's not always the case that brighter days are ahead when a fiat currency fails.
The people that are orchestrating this system behind it, the dark forces, names you don't even probably know or that you might only suspect, are never going to give you your own money. And gold is a keep you honest system. They don't want that. They entrench their power by virtue of controlling money supply, and it's not one they intend to give up. So the typical game is they install. I was listening to somebody and he was making the case for Bitcoin and why my criticism of his Japanese imaginary friend superhero that came to save him with the Bitcoin creation is a false construct. He said, well, it's the first time and this is happening for the first time. And I go, no, the Chinese invented the printing press. We had gold and then we got printed fiat, and that was new technology back then. It was paper printed with a very unique stamp, and you said, this is in lieu of that. And then they tried to bypass the value of base money, gold, onto the fiat. And that was new technology, and it was crazy and it was amazing. It was basically blacksmith's IOU notes, the big guys that shoed the horses, who were holding more gold than anybody ever up at one time and could dish out more IOUs than there were gold. And that is always, a fractional reserve system is always the intention to maintain. And Bitcoin and CBDCs are going to become the new, but but it's technological, it's more convenient, all of this. That's the new derivative proxy that gets inserted in between the real money, which is the base physical metal. So you're going to be always sold an incredible technology and incredible this and incredible that. It's different this time. It's so different. It's always so different, to get you to put faith into a proxy that is based off of a base money that they later sever the tie for, and everything becomes entirely faith, which is fiat. Hence, fiat comes from a faith-based system. We say that note is worth a certain amount of hamburgers or meals or potatoes because of everyone accepting the price for that good, and that note being passed around will secure you it. The problem is the faith has been undermined. The debt is collapsing, too much fiat, and we're at the end of such a cycle. And part of their job to rinse, repeat their continual scam is to get participants to develop faith in some new derivative proxy rather than the original money. And that's where CBDCs come in, and I think they will be doing it now. We're saying bankers with this, and we can do that, and you can do this, all these features and all of this. It's going to be a technological whiz-bang, and it's no more than the printing press that the Chinese printed and a piece of paper having printed on it. It was new technology once back then too. People didn't have prints, the ability to do printing, and clean white paper as easily available. And fiat note was a wonderment. It's beautiful, and an IOU, and it's backed by your government and backed by this. Don't put your faith in the same criminals, because they will sell you the same scam, just with a different flavor, a different tune. And I do subscribe to the CBDC. They want to separate us from real money entirely. In fact, it's my view they want to dispossess you of all your possessions. And tokenization is part of the weapon that Larry Finkelstein Fink is very happy about, because he wants everyone. You'll be asked at a clipboard level, a digital one, no doubt, to outlie all your assets. They want to know what you have, so they know what they can steal from you in due course, which is their intention. And we are moving into a technological corporate fascist, where the corporations have worked in conjunction with government. Many of them were CIA departments that then got privatized corporately. Palantir is one of those. There are others, by the way, much more than you think. And they are actively working against the citizen. The citizen is the patsy in a scam ruse of big corporations and dark state government. That's permanent government when I say government. And they want to sell you on another derivative proxy, and they want to permanently separate you from the true base metal of money. That is gold. So I've warned on your channel before that just buying gold isn't enough. You're going to have a legal environment that's going to change. Remember, truth is becoming a revolutionary act. We're quickly finding in many of the nations, ask the UK, who have social media posts, people arrested and put away for 3 years, and other far more violent crimes going underpunished. You have a two-tier policing system, you have a two-tier legal system, and you're not in the party that gets the privilege system. We're in the underprivileged class. We're traveling in cattle class. And they view us as that. So I think there's going to be a mass dispossession that goes with this as part and parcel of it. And it is a communism. The private ownership, they want a rentier society where we're on a subscription model for everything, and you receive your money from state. Thereby you comply, and social score-wise you behave. Otherwise, loss of privileges, let's say. That used to be your real freedoms. So then take your freedoms away and allow them back as privileges providing you, and then add all the clauses of compliance that they seek. So it is a dark dystopian future. I would say to Americans, have some alternative plans outside of America and other places you can go and live. I know it's not a popular message, and make it not the West either, anywhere else in the West. But there's a lot that we need to focus on right now.
Certainly. If people are interested in learning more, they can go to themarketsniper.com. And also, you're very active on YouTube and X. Can you share with us a little bit about your work?
I think you need to buy time. I think you need to build wealth, more wealth, even if you are quite wealthy. And you need it in different jurisdictions. So our goal is to help you build wealth by judiciously using very light leverage in key unique moments where you can be oversized in positions like the gold position we just demonstrated. That'll make you wealthier. You'll stack more. Also, use that to preserve and retain that wealth is another whole challenge. And how you do that is the optionality you have across different legal jurisdictions. It is pretty coordinated globally, but there are real opportunities for people to get capital gains free in other countries where it's more likely to be entrenched, and long-term good residencies, more traditional legal systems in terms of family values, and then to secure freedoms as well. I do feel those countries that are going to be hardest hit are going to face the more totalitarian governments, because you're going to be more inclined to be angry and riot. So they're going to seize greater control, martial law, things like that. Lockdowns will be far more endemic in the nations where there's been a massive re-rating in living standards. And there's more a tendency. And unfortunately, I see the West this time being the biggest recipient of the hardest hit to living standards. And this is going to jolt everybody, and most people are underprepared. That's what our YouTube channel and our community is all about, giving you optionality where actually you have metals, wealth, and profile in different jurisdictions that give you more optionality to live a better life, greater freedom, greater wealth, and greater access to movement and lifestyle. So thanks for having me on, Elijah. Great to catch up with you again.
Well, it's always great to have you, Francis. Thank you so much for your time, and God bless.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 22nd through September 29th, 2025, while supplies last. First this week, the famous 1-ounce Gold Krugerrand are just $60 over spot. Next, MS62 $10 Gold Liberty are only $90 over melt per coin. Finally, 100-ounce Silver Johnson Matthey bars are just $2.20 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.